Oh, okay. Wow. I will get us started. So welcome everyone. Thank you so much for joining us today. We have a great webinar in store for you. So I'll just start by doing some introductions. So I'm Amy from A2X, so I'm the product marketing manager at A2X. And we also have Brittany Brown here from LedgerGurus. So I just want to start by saying you guys have picked a really good webinar to join. Brittany Brown is a fantastic speaker. She's spoken at many events. She actually spoke at the A2X camp last year and she got rave reviews. Not only that, but she runs a really successful practice, helps a lot of Shopify businesses, and she has experience running an e-commerce business herself. So I'm going to go out there and say I don't think there's much about Shopify accounting that Brittany doesn't know. So you've definitely picked an awesome webinar to join, and we're really, really glad to have Brittany here with us today. So before we jump into the agenda and what we're going to cover today, I'll just hand over to Brittany for a moment so she can tell us a little bit about her practice, LedgerGurus.
Yeah, thanks, Amy, for that very kind introduction. So as Amy mentioned, we are an e-commerce focused accounting firm. So on top of doing the e-commerce accounting that we're going to talk about in depth today, I feel like if you're really going to get into e-commerce accounting, you probably also need to be able to talk shop on inventory and sales tax as well. So if this is if you're at the beginning of your journey and that's kind of where you're planning on going, those are two other specializations I would highly recommend you get kind of serious about gaining your knowledge in, because those are all very intricately weaved topics. So we always say that our vision is to basically help other businesses succeed, and accounting just happens to be how we do that. We want to be the best business decisions our clients ever make, and we want to be the best career decisions our employees ever make. I would like to believe that we're pretty successful in that most of the time. But we're very passionate about the topic, that's for sure, and the space and the partner. Quite honestly, A2X is I'm a raving, foolish, enthusiastic, like paint my face, like rah on the corner fan of A2X. Yeah,
we love it, absolutely, and definitely I think in summary, a very, very safe set of hands. We get a lot of inquiries through our partner directory, and we send them to LedgerGurus, and they always great reviews. So you're in safe hands with LedgerGurus. First of all, we're going to start by talking about why accurate Shopify bookkeeping is key to profitability. We'll talk about why Shopify bookkeeping is so complicated. And then we've got a month-end bookkeeping process that we're going to go through. We've got an awesome checklist that we are going to share with attendees today, so you can follow along. It's not only talking about what you need to get started, but also a step-by-step guide to talk you through the process. So some secret sauce, absolutely. And then at the end, we will have questions and answers. So if you've got questions as you go, pop them into the Zoom chat, and we can answer those at the end. I will also just make a note that the webinar is recorded, and so we'll be sending that out afterwards too. Okay, I'll start actually. What I'll do is just pop the checklist into the chat now so that everyone has access. So we're going to start by covering a little bit about why bookkeeping for Shopify is so complicated, but that will give you access to the checklist to begin with. If you are watching this recording on YouTube after the webinar, you will be able to find a link to the checklist in the notes below. Okay, so let's start off with why accurate Shopify bookkeeping is so important. So this might sound like a bit of a leading question. So if your business is doing fine, your financials seem fine, you might not really give your financials a lot of attention. But the problem is a lot of businesses don't really need their financials until they really, really need them. So I thought I'd start by asking you, Brittany, I'm sure this is something you see firsthand. So why do you think accurate Shopify bookkeeping is so important?
And I think probably one of the most compelling ways to answer this question is actually by just telling some of the stories that we've seen of when it wasn't done correctly and the outcome of that. So interestingly, I feel like one of the most important parts of Shopify bookkeeping, and one of the things that makes it most unique as opposed to like Amazon or eBay or Walmart, is the fact that Shopify has multiple payment processors. And a lot of times what we find is that clients will sometimes turn on payment processors because they're just running their Shopify store, and behind the scenes, they may turn on a payment processor, but they may not even necessarily remember that they turned on that payment processor. And it has doesn't happen all the time, but it definitely has happened that a client of ours, as we're going through the initial cleanup of data and onboarding them as a client and starting the process. We will find payment processors that they had turned on, forgotten they had turned on, never finished the job of actually syncing the payment processor to the bank account. So the payment processor was taking the sales, but not deposited the money into their bank account. And they didn't even know that. They had no visibility into that. So that was literally lost revenue to them until they realized that and were able to circle back around and finish the job of connecting the payment processor. So they could actually get the money that they were being paid for their sales. And that is a issue that is caught in the bookkeeping process of Shopify accounting. Another one that we've seen is that when people are using Shopify to facilitate sales that would not normally be like coming through Shopify. So for example, we had a client who was using their payment processor on Shopify to process sales payments, but the sales payments were for like wholesale orders for customers that had actually like where they invoiced them through QuickBooks, and then they processed the payment through Shopify because the client wanted to pay with a credit card and they didn't have any other ideas available to them on how to do that. And so in that case, they were actually double stating their revenue because their Shopify reports were showing sales that were not valid, and their invoices were showing sales that were valid, and the payment between the two of them were kind of missing each other and crossing. And so they had greatly overinflated their taxable income that year before they went through and did this process of cleaning all of this up. And really, I could go on all day long about all of the different scenarios and harebrained things that a business owner might do to solve a quick problem that then leads to another problem, or a payment processor that got turned on, and this is how that happened. But at the end of the day, accounting tells the story of the business, and good accounting tells an accurate story of it, right? And so like if you're doing your bookkeeping well, then you catch all of these kinds of issues because you're watching the story all the way through. So it's just a really important thing to know.
Yeah, definitely. It's crazy that you can have a situation or two situations where both the customer is understating their income by not realizing that they're missing out on some, and then overstating it by kind of doubling up. And I guess the thing with Shopify is it's so easy. You can just go to the App Store, you just add it on, and it does make it really easy and like a nice customer experience because you can have all these payment gateways, but the implications can obviously be something they don't think about. So we've got a bit of a list here. So we've obviously talked about payment gateways. Are there any others that kind of stand out to you as being troublesome, or payment gateways is the main one?
Yeah, one of the ones that I feel like A2X does a really good job of solving is the payment periods. And so when you're trying to close out your books and you're moving through all of this, and some of the sales are happening in 1 month, but payouts aren't happening until the following month. And one of the reasons why getting payout periods accurate is so important is because gross profit margin is a really important metric for e-commerce businesses to watch. And if you're tracking cost of goods sold, but there's a mismatch between when you're recognizing revenue and when you're recognizing cost of goods sold, you end up with skewed margins, which can be affecting management decisions. So I feel like A2X does a really good job on all of these things. But one of the things that as I really got into it, I was particularly grateful for was the way that you guys solved payout periods.
Got it. Again,
sorry, let me add one more thing
go for it.
To the point at the bottom, which is if you are new to e-commerce accounting in general, one of the key things that makes this kind of accounting different, and one of the reasons why the A2X tool is so valuable, is because all of the activity is typically happening in your bank account and credit cards if you are just a regular business and you're sending out invoices and you're paying bills. If you capture the activity of the source accounts, the bank accounts, and credit cards, you're going to have a pretty complete picture. But for e-commerce accounting, and this applies to all channels, not just Shopify, but Shopify in particular, the activity is actually passing through the channel, not the bank account. And all you're seeing is these lump sum deposits that are hitting, right? Do you want me to just keep going on this slide?
Yeah, I was going to say, it sounds like a really nice segue into explaining.
So let's just talk about the flow of this so you guys kind of understand what we're talking about. So on the sales channel level, you have all of these individual sales orders. And from an accounting perspective, I don't really care about who ordered sales order 1111, because typically we're collecting payment at the time of the sale. And so there is no AR follow-up that's required in order to make sure I capture that money. So what I really care about is like the channel level activity, what happened across the board on those sales. So you may have thousands and thousands of sales orders that come through. You may have hundreds of thousands of sales orders that come through this But the nice thing about e-commerce accounting is that it can be summarized without losing any sort of integrity around the data. So we take all of these sales orders and then we summarize it on the channel level, and we say on Shopify as a channel, what happened? This is what happened in the sales. This is what happened with discounts. This is how much we collected in sales tax. This is how much we collected in shipping income. And so you can really simplify a lot of the noise of a million different sales orders and say, this is what happened on this channel during this period of time. But then we complicate it again, because this is where Shopify accounting becomes much more complex than, say, Amazon or eBay or Walmart, is because as opposed to every single one of those channels that has one payment processor that all of that processed through. And so you're only looking for deposits from one source. Where Shopify becomes really tricky is that it then like disperses into the payment processor that the client chooses, that the customer chooses at checkout. And at that point, they may be going PayPal, they may be going Shopify Pay, they may be going Amazon Pay. Literally, I mean, there are endless numbers of payment processors that sellers can attach to their websites. These are just some of the most common ones. And then within those payment processors themselves, additional activity is happening. Typically, returns are happening at the payment processor level. Processor fees are being captured at the processor level. And then you have to reconcile all of that noise to what actually deposited into the bank account to bring it all back around to be able to tie out everything that happened on the channel, everything that happened through the payment processor, and everything that actually deposited into the bank account in order to fill a high degree of confidence that you have a complete and accurate picture. So that's what makes it so complicated, is this disbursement is really what makes it complicated.
Yeah, absolutely. And I guess a lot of sellers can be selling across multiple channels and they've all got their individual individual pieces, but certainly the payment gateways on Shopify make it really complicated.
Mm-hmm.
I guess so the bottom line here is if you're not bookkeeping accurately, you have limited visibility into your insights and profitability and business performance. So what we've got now is a bit of an example of what this actually looks like in real life sort of situation. So what you would see there on the left would be your deposit in QuickBooks. So as Brittany said, you get a deposit from, this is just a Shopify example, not even looking at payment gateways at this point. So you get your deposit from Shopify. It's very easy to see that money hit your bank account and just think, okay, that's my sales amount. And we see this all the time where sellers will just code that whole amount to a sales account. But that's really problematic because that's not actually your sales number. So if you can see on the right-hand side here, this is that deposit broken down into, I guess, good data or what this deposit actually was. So you can see here the deposit wasn't, the sales amount wasn't the 15,072, it was 24,678. So that is the amount that the seller did in sales, but they've had a bunch of fees that have been charged, or they've had a lot of that might have been gift card sales that needs to be put to a liability account. So this is the difference that you get in the insights that you start to see when you are splitting out the transactions that occurred. The other situations that we see happening, I guess, if people aren't accurately accounting for their Shopify, is they might just ignore it. So this might not be intentional. They might start up a Shopify store, and sometimes accounting is a bit of an afterthought, unfortunately. And so they get up and running, business is booming, and then it comes to the end of the year and it's time to do accounting. And then they've got a lot of data to try and work with. They might instead create best guess entries. So this is similar to what I said before, just seeing that deposit in QuickBooks and putting the whole amount to a sales account. What you instead might do is just try and pop in what you think is your sales amount without it actually reconciling back with what you've been paid. Or the other option is to pull the report from Shopify and do it manually. So it might seem, I must admit, when I sort of started looking at this, I thought, surely you can just get that information from Shopify. But it is really complicated for some of the things that Brittany mentioned earlier with payment periods, a different transaction type. So does this all sound relatively familiar, Brittany? Are you seeing cases of these sort of things all the time?
Oh, yes. And the other thing is, while Shopify has great resources like their finance summary report to kind of give you an overarching idea. That report does not catch any of the issues we just talked about. Like if you're running sales through there just to capture the payment, but it wasn't actually a true online sell, that will be reflected in the finance summary. Like it doesn't, the finance summary is a helpful check to validate data against, But if you're trying to do bookkeeping against it, you will never catch all of these nuances that cause issues without the visibility into it.
100%. So I guess it's not all doom and gloom. That is the whole reason that A2X exists. So I'll give you a little bit of an overview about what A2X does, and then we'll start diving into the checklist and the step by step. So A2X provides you with automated and accurate e-commerce accounting. So what that looks like is it will connect to your Shopify account. So you come in, you create an A2X account, and you connect it to your Shopify store. It then starts pulling in all of your uncategorized data. So all of the individual orders start coming into A2X, and we start breaking out things like sales, fees, taxes, refunds. We'll split out the payment gateway transactions and start trying to organize that data. We then create an entry that will be posted through to your QuickBooks to reconcile the payout. So that's the key thing with A2X, is we're looking to reconcile the payout that you've received. So that means it's going to cover the correct payment period that you've been paid for, and it's going to cover all of the transactions that occurred. But instead of sending everything through individually, we're going to do a nice summary entry. So you'll get a summary of the sales that occurred for that period, the tax that was collected, shipping income, all of the different transactions that occurred, and you can have confidence in knowing that it's right, because when you send it through to QuickBooks, it's going to match perfectly with the entry with the deposit that you have in your bank account. So you'll have your Shopify payout, you'll have your A2X journal entry, and those will match perfectly. We also do things like attach a summary. So if you ever needed to look up a specific order, for example, if you wanted to know, whether an order was included in a specific payout, we do that as well. So the whole idea of A2X is that it provides you with one-click reconciliation. And then really we're just a tool in the background to make sure that you're getting the accurate data that you need into QuickBooks, so you can then run the statements that you need and have the insights that you need to run a successful business. So that's a pretty good overview of A2X. Some of the reasons why sellers choose to use A2X is because it automate the process, so you don't have to do manual entry. It gives you visibility. So once you have good data in QuickBooks, you can then start to delve into how your business is doing. You can know the profitability of individual SKUs. You can have a look at your profit and loss. And I guess the other thing is that it provides you with confidence. So because that entry is matching to the money you've received, there's no, manual adjustments or things like that, then you can have confidence that your numbers are right. And that is a lot of, that's a massive benefit for someone that might have been essentially flying blind. So that's a massive benefit of using A2X. And then the other one there is, it might not be that you're looking to sell your Shopify store right now, but in the future, if you do ever want to either sell your business, or I guess go for lending or things like that, then you do need accurate accrual accounting. So you may as well get onto it now rather than leaving it to be a nightmare in months or years' time. All right, so let's jump into the checklist. So hopefully everyone has access to the checklist. I popped it into the webinar chat, but if you're having any issues getting access to that, just let us know. But what we're going to do is start by talking about what you actually need from a monthly bookkeeping process. So I guess all in all, this whole process is going to give you the steps of both what you need to get started and also the steps you need to go through to make sure that you're accurately accounting. So Brittany, did you want to jump in here? Is there any that really stand out as being pain points to get from customers or anything like that?
Well, actually, I think like if someone was to just give me a list like this and I was to see something on it and be like, I actually have no idea how I'm supposed to use that in this process, I think it would give me like extreme anxiety. So if you're okay with that, I'm just going to like touch on each of these and talk about like how they're used in the process and where they're used in the process. So anybody watching this can just feel a little bit of additional confidence that they're at least on the right track. So if you have your monthly bank account credit card statements, obviously this reconciliation process is a huge resource to make sure everything's accurate and complete and nothing's been left out. So this is just about really closing out all of the data that you're going to be gathering. The Shopify finance summary, while it doesn't necessarily like the data that's coming in from A2X completes the picture of this, the Shopify finance summary can be a really good just confidence creator, that it's like, okay, I can see that my numbers are in the range of what is happening on the Shopify finance summary. And if there's large discrepancies, now you know that there's probably some additional things you need to dig into. Loan transactions, because they come in, a lot of times you're borrowing money through PayPal or Shopify Pay or Amazon Pay, and they're recouping their money through the deposits. If you do have loans that are factoring into this, you're going to need to see that so that you can understand why you're not getting the full deposits that you thought were coming. Merchant account statements. So we talked about how important this reconciliation process is for reconciling. A lot of that data is only available on those account statements. So that's where you're going to see like how much they charged you in settlement fees, stuff like that. And this then factors into this additional one, this pending payment status. So if I'm waiting for a payment to come from a payment processor and it hasn't deposited yet, that's going to factor into my reconciliation as well. So understanding what you expected to see deposit and what has already deposited, therefore what's still in pending status, will help you reconcile those accounts. Bills and or receipts, this really comes down to just the bank coding process. What information do you need to make sure you're coding those transactions accurately? But also bills and receipts factor into your calculation of cost of goods sold, which we're going to get into in a little bit more later. Log into additional apps. So there's a lot of different apps that touch this space. Some that immediately come to mind that affect this process in particular are return apps, like Returnly and Loop are examples. These really affect this process as well. A product cost catalog is basically a summary of all of the SKUs you have on hand and the cost that you're associating with each of those SKUs. This is again where we really come into a discussion about cost of goods sold, which is a very important part of the complete financial picture on this. The unit sold by SKU, this is definitely something that the A2X process can help with significantly, but you can't really calculate COGS unless you also know what actually sold by SKU. And then a list of manual orders. And the reason why we get into this is these manual orders are the ones that are not processing through your traditional payment processors, and they are going to create discrepancies between what you actually saw processed through payment processors and what Shopify reports say, and things like that. So you just need to understand what those manual orders are, why they're hitting your books or your clients' books if you're doing the accounting for them. That's kind of a swear word in the Shopify accounting space, manual orders. They really do create a lot of pain. But if you don't have visibility into what's happening there, you're going to end up with discrepancies you can't account for. So hopefully as you see this list and you're like, oh my gosh, I don't even know what that is. I don't even know how I would use that. I don't even know where that would factor in. Hopefully that helps clear up some of that, at least going into this.
Absolutely. Love it. All right. Now let's get into the nitty-gritty.
Yes, the nitty-gritty. Let's do it.
All right. Where do we start?
All right, guys. So some of you on this call are probably going to be accountants that are looking to serve your clients, but some of you on this call are probably people who are completely new to the accounting space, and you're not an accountant at all, but you're running an e-commerce brand. So I want to just start by saying our partnership and A2X, we teach business owners, e-commerce business owners, to be successful accountants for their e-commerce businesses every day. This is a very approachable, doable process for you. And A2X takes all of the pieces of this that are really complicated and challenging and dramatically simplify that. So if that's what you're here for, then great. You are definitely in the right place to learn how to make this approachable. So the first thing you're going to do in the beginning of this process is you're going to be sending your sales and income from A2X to QBO. Now, this next little part, we're definitely going to be getting into the weeds on, and I'm going to be going into enough detail to hopefully empower you guys to feel like you're prepared to succeed in this area. So I hope we don't lose you because we're about to talk accounting, but I'm going to hopefully try to keep it really real. So when you go into your bank register, you're going to see transactions there that I say your bank register inside QuickBooks. When you go into your bank feeds inside QuickBooks, hopefully you've synced the bank accounts. If you haven't yet, you definitely need to do that. You will see deposits in those bank feeds that are obviously deposits coming over from Shopify. Those are the ones that A2X is designed to basically account for you. Amy talked earlier that if you just take that deposit that's coming over from Shopify and you just code it to income, you're missing a whole lot of information and you're really skewing your financials, because that number that deposited from Shopify is not income, is the net effect of all of those other things that we talked about. So that's the first thing to be aware of, is that those deposits that are hitting your bank account are not income, should not be coded as income. Okay, well then how do I code them? What you're going to do is you're going to come over to this screen that Amy's showing right now of A2X, and you're going to find the associated deposit. So like, let's say this one right at the top, $51.15. Anything that says Shopify payments right next to it, is going to have a dollar for dollar match about what actually hits your bank account. So you're going to look for $51.15. You're going to find this transaction inside A2X and you're going to push it over to your QuickBooks. As soon as you do that and you refresh your screen, now inside your bank feed, you're going to have the option of matching those transactions against these transactions that are pushing over from QuickBooks. And that is literally pushing over from A2X. And that's literally all you're going to have to do. Find the transaction, push it over, hit the match button. That's all the accounting that you're going to have to do for those deposits. It really does like accomplish the hardest part of all of it. With these other ones, as you can see on the screen, you can see if you look like 4 columns over from the left, you see the column that says payment gateway. This column is going to tell you the payment gateway that these particular cells process through. So the Shopify payments are going to have a one-to-one match, and they're going to match against bank account. I talked about those, but the other ones, the ones that say PayPal, the ones that say manual, those are not going to be handled exactly the same way. So let me tell you what to do with your cells when those ones hit your account. Typically best practice, at least that's what we do here at LedgerGurus, is we set up clearing accounts that are specific to each payment processor. So I'm going to have a clearing account called PayPal Clearing, and I'm going to push over this journal entry from A2X, and it's going to affect that PayPal clearing account. Then when I see transactions hit my bank account that are obviously deposits coming in from PayPal, I'm going to code those deposits to that same payment clearing account. And the idea is that A2X is basically going to say, hey, we expected to see $400 worth of sales processed through your PayPal account. Therefore, there's now $400 worth of sales data with all of its accompanying detail sitting in your PayPal clearing account waiting to be reconciled. And you are then going to see the deposits coming over from the bank feed, and you're going to say, saw the deposit from PayPal, coded it to the PayPal clearing account. Sure enough, expected to see $400 of sales come in, saw $400 of sales come in, or saw $380 of sales come in, and therefore pulled up my PayPal statement, saw that there was $20 in payment processor fees. Yep, it all zeroes out, it all matches. That's how you use a clearing account that has other payment processors involved. I would love to ask if you guys had any questions about what I just said. If you do have questions, go ahead and put them in the chat. But that's the distinction I need you guys to come out of this first part with, is that Shopify payments are an exact match to what deposited into the bank account. You will push it over, you will refresh your screen, you will match. All other payment processors, you will map to a clearing account inside A2X, and you will code to a clearing account when you see those deposits hit your bank account. And then that will put all the detail in one clearing account for you to use as part of the reconciliation process at month end. Okay, moving on. Record bills and or expenses. So this is where we're really then saying, like, this is not just e-commerce accounting, we're talking about the entire accounting flow. So as you see other transactions come into your bank account and credit cards that have nothing to do with e-commerce activity, you're just going to go ahead and code those in the normal way that you would code them according to whatever the transaction was. And you're also going to add any activity that is of an accrual nature. So if you have bills that need to be tracked and then were paid, you want to make sure that the stuff coming into your bank account is captured that way as well. After you do all of that, you're going to go ahead and allocate all of these bank transactions. And so we call these source accounts. So bank accounts and credit cards are called source accounts. They make up the 95% of the picture of what's happening in your business. And this reconciliation process that is step 4 is really, really, really important. A ton of people who are not accountants. So if you're an e-commerce business, I am talking to you right now. You need to do bank reconciliations. And the reason why is because the bank reconciliation is what ensures that all the activity was captured, that nothing was duplicated, nothing was missed. And it's also what gives you confidence in your skills as a bookkeeper doing your own accounting. If you're an accountant and you are not doing reconciliation, you are missing your calling in life. This is like the accountant's haven. As far as the bank reconciliation process goes, there's a million videos on YouTube that show how this process works. This is definitely, it's a very straightforward process, but a very important process. So if you haven't been doing this yet, find a YouTube video, learn how to do it. Yeah. Okay, hopefully I haven't lost you yet. Let's talk about the next phase of this, which is really about understanding your product costs. So the next thing you're going to do is so we just talked about the revenue side and we just talked about the general expense side. Just so you know, inventory accounting is the most complicated part of e-commerce accounting, and that's even over and above Shopify. So if you find yourself struggling in this area, you are in good company. Like, it is not, you're not imagining it. It is very complicated. It is very hard to do. There are ways, though, to approach it that are not overwhelming. So the first thing I would say when you're getting ready to account for your product costs is do not be a perfectionist about this. It's like the proverbial sock in the dryer. Like, I put 2 socks in, I have no idea why 1 sock came out. When I do my end count at the end of the month, I cannot tell you why I thought we had 800 units and then we sold 700 and we should have 100 left, and yet we only have 40. What happened? Like, if this is what you're experiencing, everybody in this space is experiencing this as well. So what we tell people to do is like engage in the cost accounting of inventory, because it's incredibly important part of your financial picture, but do not make yourself crazy shooting for perfection, because you will lose your will to live very shortly if you approach it that way. So the first piece of this is that you understand your product costs. So whether you're using an inventory management system to track your product costs, or whether you just have a spreadsheet where you're looking at your most recent purchase orders and you're using that to identify the SKUs and the costs that you're going to associate with the SKUs. I know we have a lot of videos on this on our YouTube channel about like costing inventory, and A2X has a lot of resources on their website as well about this. But basically, you need to have some resource that tells you what your product costs are, because everything snowballs from that visibility. So you're going to review and make sure that your product costs are correct. And then you're going to upload the newest version of these product costs into A2X. So A2X does allow for cost of goods sold to be calculated. But one thing you need to understand about A2X, people will sometimes come to us and be like, hey, I'm just going to be tracking my inventory inside A2X. And that is wonderful. We are such a fan of A2X's cost of goods sold process. But you need to know that it is what you call a static system, which means that whatever product costs you load at that point in time that you push over costs are the costs that it's going to pull from. So if you updated those costs 3 months ago, and a lot of things have changed since then, you have to update those costs in order to have accurate cost of goods sold. So A2X makes this really easy. They make it really simple. They show you exactly the SKUs that they're looking for costs for, and they make it really easy to upload spreadsheets. So this is not necessarily a time-consuming process, but you have to remember that because A2X is a static costing system, whatever costs you put in there, it uses as its lookup costs until you tell it otherwise. So it's not a stick it in there and forget about it approach. Amy, is there anything you want to add to that before I go on about the cost of goods part?
I was just going to ask, so how often do you recommend that sellers review their prices, or their costs rather?
It really has a lot to do with whether or not their costs are changing with their vendor a lot. So if their vendors are giving them really volatile costs, or maybe they have raw materials that are very volatile in costs, maybe they're manufacturing themselves, maybe they're outsourcing the manufacturing to somebody else. If you're experiencing regular cost changes, you need to be making sure you're updating that. Another thing that can really affect costing is the landed costs. So if you are ordering your products from overseas, if you ordered 10,000 of those units in one purchase order and the next purchase order you only ordered 1,000, those shipping costs are going to swing. The additional shipping landed costs are going to swing those product SKUs significantly between the large order and the small order. So it will really depend on a lot of different pieces. And another thing to really be aware of with this particular part is creating consistency regarding how you're handling costs. So for example, if I am adding in my shipping costs to what I'm considering my product SKUs, I need to make sure I'm also coding those shipping costs to inventory on the balance sheet. One of the biggest problems we see people run into is that they will code it as a shipping expense onto their profit and loss, but then they'll add the shipping costs to the product costs that they're assigning to that in in A2X or whatever, or they'll reverse that, right? They won't include it in their product costs by SKU, but they will code it to inventory. So you got to remember, you have this bucket of all these costs that's going to include what your product costs were and how much you paid for shipping, and you're going to move those over to inventory, and then you're going to say, here's all the SKUs and here's how I'm assigning all those costs. Because then what's going to happen is A2X is going to say, well, you sold 15 of those and you sold 30 of those and you sold 80 of those. And over time, if you've done this exactly right, which remember, you're not trying to do this exactly right because you'll make yourself crazy. But over time, you would basically fully expense out that entire inventory expense. So you've got to make sure that you're thinking about this process in the way that's flowing from the very beginning to the very end, because you will end up with huge adjustments if you are inconsistent with how you're tracking those costs through. Okay, so that was a very long diatribe about product costs, but really, what I want you to remember about cost of goods sold is that it's product costs multiplied by SKUs that were sold during that period of time. And this process becomes extremely easy and approachable if you're using A2X to do it, because they will look up what you sold by SKU, and then they will look up what you have assigned each of those units in the product cost, and then they'll just do that simple multiplication for you, and then they'll make the journal entry. So as long as you're coding transactions with consistency through the system, and you're considering those costs from before you're pushing over the costs, you will be on your way to success, guys. Okay, so record COGS, send COGS to QBO from A2X. Wait, oh, sorry, Amy, go back for just a second. All right, so then last piece of this is last two pieces of this is that you need to be considering your ending inventory balance. So cost of goods sold is an expense that sits on your profit and loss. Inventory is a asset that sits on your balance sheet. You have to be considering those all the time as two sides of the same relationship. So whatever I bought that I haven't yet sold should still be sitting on my inventory as an inventory asset on my balance sheet. I need to be evaluating that and looking at it and saying, does this seem reasonable? Does the value of this seem correct regarding how much I know that I have left on hand? Periodically doing counts to make sure. So if you have an inventory asset that goes negative, for example, that means that this relationship between cost of goods sold and inventory, you're not watching carefully. So just be aware of the fact that those two things are two sides of the same coin, and it moves on to the balance sheet first, and then it's expensed as it's sold through cost of goods sold. And so you need to be watching both of those. And the last one on this particular page, review and adjust inventory shrinkage and lossages. So this really comes into place when you're doing an inventory count, which is so important, guys. We had a client who was a huge multi-million-dollar business, and they had not done an inventory count in 10 years. And then they went to sell their business. And because I'm telling you, it doesn't matter how good your operations are, you still lose a sock in the dryer. I don't know why. It just happens, right? And so they had to do $1 million adjustment during the inventory count that they did just before they went to sell their business. And because they were looking at multiples of revenue as their valuation, it literally cost them multiples of $1 million when they waited that long. Whereas they could have been recognizing that shrinkage and those adjustments little by little each year, they would not have been affected by that inventory count to that same degree. So that's just a little horror story for you. But I just want to say, this process where you count your inventory, you value your inventory, and then you adjust your inventory to account for what you thought would be there versus what was really there. This is a really important part of the process, whether you're an accounting firm who's helping other companies do this, or whether you're your own person running this for you. This is a very, very important part. We recommend yearly at a bare minimum. Monthly is kind of a really, really, you're an overachiever and good for you, and you definitely get a good star. Quarterly is probably a happy medium on how often you're doing this. Okay, so then record Shopify COGS and QuickBooks Online. So this is kind of a repeat of the one that we had a minute ago, except that I would say if you're not using A2X to calculate your COGS, the reason why this one is on here separately is because if you're not using A2X to do this, then this is going to be actually a different separate process. This might either be, hey, we're using an inventory management system and that inventory management is syncing and we're just going to validate the data that's coming over. You might be using an inventory management system and not syncing that data, in which case you're going to go into that inventory system and you're going to look to see what the cost of goods sold number was for the month, and you're going to journal entry it over. Or this might be that you're doing a really manual process where you're actually just going onto channels to see what's sold, and then you're multiplying it by your product cost catalog. If you are doing that, let me redirect you to the process that we talked about last page, which was if you are doing this manually in spreadsheets, you should definitely be using A2X to calculate this for you instead. It really does just make it a lot easier. It allows you to skip several steps in this process. But if you're using an IMS, I'm trying to remember the difference between the opposite of the word static. Like A2X is a static accounting system. What's the opposite of the word static, Amy?
Maybe dynamic?
Dynamic. Thank you. Gosh, I don't know why I can never think of that word. So part of the reasons why people will often use an inventory management system, even though they also are using A2X, is because an inventory management system is designed to be a dynamic costing system. So every single time you add an additional purchase order, every single time you receive inventory, it adjusts your costs dynamically. We get this question all the time. If I'm using an inventory management system, should I still be using A2X? The answer to that question is absolutely yes. And the reason why is because we use A2X all the time to capture the revenue side of things, and that is a completely different thing than the cost of goods sold side of things. Even if you have an inventory management system that will push over revenue data into QuickBooks, typically it's pushing it over and it's not considering the way that that data is tying out to what actually deposited into the bank account. So, this is something I go deep on all day, every day, because I'm heavily involved in our inventory management service. Our inventory implementation service. And one of the things we're constantly evaluating with tools is whether or not we call it an all or nothing sync. So if they have a sync between the systems, and it forces us to push over revenue data also, if we're going to push over COGS data, we consider it kind of a black mark against that system, because their process of pushing over revenue does not even come close to the reconciliation automation that we get with A2X. So like we would rather not sync an IMS system at all than to have it push over data that creates a mess that we then have to reconcile. So like this process, we within our own walls, and we work with a gazillion e-commerce clients. For us, best practice has been like we continue to use A2X to record the sales side of things, even if they're using an IMS, even if the IMS integrates, even if the IMS will push over sales data. Even if all of those things are true, our preference would still be to use A2X to record the revenue. So, but it's definitely, if they have an IMS, it's definitely, because it's a dynamic system, definitely superior to a static system. A dynamic system will always be superior to a static system. So it is a good choice to use that to calculate COGS. And then review returned quantities. So depending on the process your client or you have around returns, we have found that for us, the best way really to account for returns is this end count that I talked about. Tracking returns can be really challenging inside an IMS system, and this whole, especially if you're on Amazon, where you don't actually have total control over, and you're using FBA. But like if you have your own warehouse, if you have a 3PL, like really having visibility into the returns can be really challenging. So one of the best ways to kind of sidestep having to have a really dialed in return process, which can be an operational burden, is to just make sure you're doing an end count regularly enough to account for stuff that came back in returns. And the last one about this would be record influence products. So what we mean by that is you have product that went out the door because you sold it to your customer, that's cost of goods sold, but you also might have a relatively large amount of product that went out the door for marketing purposes, of which influence products is just an example of this. So like I sent a whole bunch of product to this influencer so they could do some sort of marketing shtick for me. And maybe I want to reclassify that as a marketing expense instead of cost of goods sold. So this, like with our own customers, this is usually sort of an add-on service, because it does take more work, but it does give you a more clear picture of margins, and it does give you a more clear picture of what you're paying for in marketing expenses. So that's what that specific line item is talking about, is reclassifying for marketing purposes. Okay, so stick with me. We're almost done, you guys. Hopefully, if you are following us up until this point, I know this has been a very intellectually intense discussion where we get into the details of this. But remember, the point of this is for you to be able to feel like you could actually take action right away and move forward. Okay, so now we're going to get into the part where we're going to start to validate data. So you review your cells in your Shopify finance summary. If you've pushed over everything into QuickBooks from A2X, you shouldn't necessarily have to do anything with this except just validate what you're really looking for. And one of the things that will kind of help you see where you might potentially have problems is if you look at the screen right now that Amy prepped, you can see that we're expecting $6,763.80 in total sales. But when I look over and I see payments, I see $6,777.18. So like I can already see that we probably have something that's going to create a discrepancy just because our total sales were not accounted for in all the payment processors that we were expecting them to. So this payment summary becomes a validation, but this is part of the reason why you really can't use it as a standalone accounting solution because of, even with this relatively small amount of money and a relatively small number of cells, you see we still have discrepancies. But is a really great validation point. The other thing you're going to do is you're going to verify unmatched A2X summaries. So on the A2X tab, sometimes you'll have transactions that are sent over that don't necessarily have deposits they match with. A lot of times this will happen if like the expenses of a period are higher than the revenue that we gained during that period, or if there was a return that was processed through a payment processor and that same payment processor didn't have cells, you won't see a deposit, but you will see a journal entry that needs to go over. So you just need to consider every single one of those entries. Some of them can be completely ignored. Like if you have cells that are coming through and you know that all manual cells are, like not actual valid Shopify cells, but more of the nature of some of this other stuff I talked about, like you can just choose not to push over those cells. You can choose not to push over the settlements from those payment processors, but you need to make sure that you understand what all of those are and why you would be excluding them and when it makes sense to exclude them. Then sometimes if you are like me, when you go to push over sales order, when you go to push over an A2X settlement, you get a little impatient and you push the button and then you push the button again. And what happens is it duplicates what got sent over to QuickBooks. Like it will actually send it over again if you told it to send it over again. So it's not uncommon for people to have duplications of A2X transactions that got sent to QuickBooks. The very best way to catch that is the reconciliation of the bank account and the bank account. You will see like A2X transactions that don't have a bank match. Those are almost always duplicates that just need to be deleted. The other thing is the clearing accounts and the pending balance clearing accounts. Like you begin to kind of understand the way that those operate. So for example, like the carried balance accounts are designed to increase and then decrease for the exact same amount, increase and then decrease for the exact same amount. So if you see transactions hit those, that are obviously an increase and then another increase that looks exactly the same, it's on the exact same date, and the little A2X journal entry is named exactly the same, you're going to delete that. So one of the things you're going to do, and that's not necessarily on this list, but well, actually, will you go to the next slide, Amy? I just need to see, like, make sure, and then show me the next one. Okay, that's what I thought. Okay, all right, go back.
Yeah.
So okay, perfect. So going in and making sure that you're watching for these things, like just make sure that you know what it looks like when something got duplicated, and you know what it looks like when something shouldn't be pushed over to QuickBooks. And like I said, one of the best ways to do that, just know your business. Like if you're putting manual orders through Shopify, ask yourself, like, why am I putting manual orders through Shopify? And do I expect to see those deposits come through A2X or Shopify somehow? Or am I simply, one of the ways we see people do this all the time is that they're like, they want all transactions to go through Shopify because it might be that Shopify is actually what's pushing stuff into their inventory management system. And so they have to put all sales orders through Shopify, even if they're not processing through Shopify payment processors. Like those sorts of decisions are going to affect the way that the accounting plays out. So just know your business. Like that's really what I'm just going to say. Just know your business. Okay, now go to the next one, Amy. Okay, so we then reconcile other payment gateways. So I talked about the flow of how we expect money to come in and how we expect money to go out. Now, if I had my druthers right now, like like, I know that this is a really intense way to take this information in. The best way in my mind to do this is like to do a demo, but that would have taken like 2 hours long and would have really lost a lot of people. So like what we're trying to give you guys is a general overview of how this should work. If you have like additional difficulties, like, and you're not sure, that's your opportunity to then reach out for help or do a little bit more research. But at least this gives you an overarching idea of all the things you should be considering. So if you feel like you're getting hit with a fire hose right now, go back and watch this again, and go back and watch this again, and go back to YouTube and watch it again. Usually it takes about 5 times to hear something before it really clicks in. A couple weeks ago, I was being trained on a new client for an accounting manager that was leaving, and I was going to be taking it over in the interim. I taped we had like 3 training sessions that were each an hour long, and I just felt like I was being hit with a fire hose. Luckily, we recorded them. The first time, none of it made sense at all. Second time, when I went back and watched it later, I was like, oh, it all makes sense now. Like as I had the pieces kind of all fall into place with their context, it began to make a lot more sense. So if you're feeling the fire hose thing right now, whether you're watching this live, watching it as a recording afterwards, or watching on YouTube, remember this principle of repeated exposure actually makes something solidify in your brain. So don't be overwhelmed. Don't feel frustrated. Don't feel, don't shut down. Just turn around and watch it again. Okay, so now payment gateways. So we talked about how you have holding accounts that are all specific to payment gateways. This is where you're going to pull out those statements, pull up the PayPal statements, pull up the Klarna statements, pull out the Affirm statements, and just look to see like money in, money out. Usually the difference on that is payment processor fees. Payment processor fees will usually be evident on the statements as well. Just know the hardest one of these to reconcile is PayPal. So if PayPal is giving you a lot of pain on this, and especially if you're using foreign currencies, again, do not shut down, do not feel overwhelmed, do not cry, do not lose your will to live. You are in good company. PayPal is a very challenging one to reconcile, in part because you're often paying vendors with it. There's just a lot of stuff going on there. Then, like I said, as part of this, you're going to review the pending payments. So if you were expecting to see a certain amount there and it's not what you were expecting, look for pending payments that are still kind of in transit. Review chargebacks as part of this. So like if the account doesn't have the money in it that you thought it would, you may be missing a chargeback that was processed through the payment processor. And then you're going to review the currency conversion. So a lot of these things, like the whole currency conversion, we could have a whole webinar on currency and how currency conversions ruins our lives as accountants and anyone who's trying to do the accounting. So we're not going to go deep on what that means right now. But if your e-commerce business is accepting payment in foreign currencies, just be aware that you need to be considering this and that it's going to affect your overall financials. Okay, next slide, Amy. All right, finally, and you're going to be tempted to skip this step. Do not do it. Do not skip this step. The last thing you're going to do is you're going to review these financials. Because guys, here's the thing. This is the whole reason you did it all, was so you could have accurate financials to operate your business off of. You think you did it, so you had something to give your tax accountant, but that is not why you did this. You did this because you are sophisticated, thoughtful, engaged business owners who actually care about what the financials of your business are telling you about what's going well and what's not going well. So what I want you to do is pull up your profit and loss statement. It's just on the left side, click on reports. It's right there. Profit and loss and balance sheet are right there. Your profit and loss is going to show you basically how much money you made that month. It's going to show you all the money that came in, all the money that went out, and therefore whether you are in the green or the red for the month. And your balance sheet is going to show you all of your source accounts, their balances at the end of the month. It's going to be where you track any loans. It's going to be track where you inventory that hasn't been sold yet. These are really important things to understand. I recommend actually pulling up these accounts and actually on the reports itself, if you click on the number, and say you had sales for $6,000, click on the $6,000. It will show you every transaction that made up that account. And this is a really great way of just reviewing it, especially like in the expense categories. Like, does it make sense that this was coded this way? I see Walmart on there. It was coded as office supplies. Does that make sense to me? If Walmart was coded as insurance, probably miscoded, right? So like open up this transaction, just click on it, just make sure that the transactions that are sitting there make sense for that account. It's one of the best ways to review your financials. Look at the overall complete picture. Does the overall sales number tie back to what you believe is approximately your sales revenue? This company that I was talking about that was running their payments through Shopify, they had overstated sales by like $1.5 million, right? So like, how do they know there was a problem? Because they pulled up their financials and they were like, whoa, we definitely did not make that much money. There's a problem, right? So you're looking at it for reasonableness, you're looking at it for accuracy, and then you're looking at it for insights, right? Like this is the most important part. Look at it for insights. You can run, like if you select a period for like the whole year, you can choose to look at the amount by month. It's just a little drop down that's right underneath the date. You can say, I want to see this data by month, by class, by whatever. Then you can see like, how am I trending each month? Like, how are my sales going up? Are my sales going down? Like how do things appear to be going? One of the most important things you can do as a business insight is to, as a business owner, is to consult your financials for insights. And with the balance sheet, you just want to make sure you can explain what the balance is and why it is that way. The reconciliation process that I mentioned earlier is going to be like the most important part of like making sure your balance sheet information is correct. Every bank account, every credit card should be reconciled at the end of each month. Okay. All right, Amy. Back to you.
That was incredible. Thank you, Brittany. So if you're like me and you're sitting here thinking, lapping this all up and thinking it's absolutely amazing, but gosh, it sounds kind of hard, then
Right.
here is your go-to. So you can reach out to Brittany. Just go to Practice LedgerGurus. You can reach out to them directly, or you can find them on the A2X directory. So thank you so much, Brittany. That was awesome. It was so detailed, so practical. I loved it.
Thank you.
Okay, so there's a link that you can try A2X there as well, but we've got Q&A and we've just got a few moments left and we've got a couple of questions, so we'll do quick fire. The first one is a specific seller situation and they're asking whether they think you need A2X or whether they can just handle it manually. So I'll read it out. So it says, as a startup about to sell a single final product in a month, is it okay to skip steps 5 to 8 as long as we're coding COGS correctly in QBO? The supplier maintains the inventory which we could track via Excel. Or should we get this A2X COGS thing from the beginning? I'm concerned about the extra maintenance of syncing.
Yeah, this is a great question. Inventory is such a pain that, and oftentimes it can completely bury new sellers, especially. So this one being a new seller is a great example of this, can completely bury you in minutia around trying to keep this straight. So it is okay, especially in the first phases, to just skip it, to code everything to just cost of goods sold immediately. You need to know that when you do that, your margins are going to be like, you're going to be significantly less profitable in reality than what you really are. And you may need to, at the end of the year, kind of back out inventory that's still existing at the end of the year to get an accurate, complete picture of the inventory. But like, if you watch any of my videos that I've done on YouTube, I talk about, like, if you're a new seller, handle inventory this way. If you're a more experienced seller, handle inventory this way. If you're a really experienced seller, you need to be taking the inventory really, really, really seriously. But yes, mastering inventory accounting is not the most important thing for a new seller to be doing. And so just expensing it to COGS right away and then tabling that learning curve for another day. The only thing I would say, though, I recommend building a product cost catalog immediately. So whether you're using it or not to track COGS, it's going to be the kind of thing that you're going to want to know later. And it's also informing other decisions like how you should price your product. And you need to get in the habit right out the gate of understanding what your product costs are. So whether you're going to do true inventory accounting or not, start a product cost catalog from day one, just to give you better visibility.
Awesome. Love it. Okay, hopefully we can whip through some of these as well. Do you have a recommended system that's your favorite? I think this is directed at inventory.
Yeah, I'm sure it is. So my two favorites are Finale and Sin7 Core are the two that we implement. We also implement Katana. We're looking into Unleashed as well. So those are just 4. I know Finale is really good. I know Sin7 Core is really good, previously known as Deer. So those are my favorites. And that's why I built a practice around implementing those ones in particular.
Nice. Okay, next question. Should I create a PayPal bank account in my COA, or is a PayPal clearing account enough?
So My first tip around PayPal is if you're using PayPal to pay vendors as well, then actually go get 2 separate PayPal accounts. It doesn't cost anything more to have 2 separate PayPal accounts, and it will drastically simplify your PayPal accounting. As far as the account that's just going to be paying vendors, yes, sync that one to QuickBooks and track all the transactions. But for the one that's actually accepting payments, a clearing account that is not a bank account, I mean, you can classify it as a bank account, but don't sync it. A clearing account is better for the sales side of things, but the details on the vendor transactions, like best tip I can give you, have 2 separate accounts. It'll really make your life easier.
Awesome. Okay, and one last question. Is this setup feasible for omni-channel e-commerce businesses in Europe? Amazon, Shopify, B2B, manual orders.
So if you have different e-commerce channels, you definitely want to use, like, you'll have different A2X subscriptions for each of those. Shopify is the most complex accounting within the A2X space. The rest of them are extremely straightforward and easy. So we use it for all of our omni-channel clients, especially for all of those other channels. So yes, it's absolutely feasible. And not just feasible, like our largest, most complex clients doing many tens of thousands, many tens of millions of dollars a year. This is the process we put them on and have great results with it.
And then the last one is more of a comment. It says, Brittany, this is fantastic. Thank you for your insights. And I agree. This has been absolutely brilliant. Thank you so much for your generosity and sharing all your expertise. And once again, if you guys are looking at this and thinking, wooly moly, this looks overwhelming, reach out to Brittany, because you'll be in very good hands. So we'll wrap up the webinar there. Thanks very much, everyone.
Thanks, Amy.
No worries. Bye-bye.